Okay, good morning, everyone. It's 10 a.m., so we will get started. Thank you very much for joining us today. Today we have two guest speakers from MassHousing, Lisa and Jeremy. We're very excited to have them today and to share some exciting news and updates that they are going to share with us. We are going to have Q&A session at the end of their topic presentation today, and Sean, my co-chair here today, will review those at the end. So if you have any questions, feel free to put them in the chat. This session is being recorded and your your microphones will be muted during the presentation. So thank you, Jeremy and Lisa, if you guys would just introduce yourself.
Great. Thank you. Good morning. Thank you, Sarah and Sean and in the MMBA for inviting MassHousing to participate in the Affordable Lending Summit. My name is Lisa Fiandaca, and I'm the Senior Director for the Homeownership Production Department here at MassHousing. Joining me today is my colleague, Jeremy Manassas, and I'll turn it over to Jeremy to introduce himself. Jeremy.
Hi all. I'm Jeremy Manassas. I'm the Senior Manager of the Home Ownership Lending Operations.
Started.
So I manage the day-to-day operations of correspondent, wholesale, and secondary market items for MassHousing's Home Ownership Division.
Thanks, Jeremy. Again, we really appreciate the opportunity to be here today, and we want to keep this, and it's an informal session to be able to answer questions for you throughout this as well. Sean, you'll be managing a chat session, I believe.
Yep, that's correct.
So we'll be taking questions in the chat and then going over them at the end of the session. Many of you have worked with MassHousing, you're our partners, and others have worked with us in the past or will be working with us in the future. MassHousing is the state's affordable housing agency. Jeremy, next slide, please. Just a little bit of background of who MassHousing is and how long we've been around. We were created in 1966, and we raise our funds by selling tax-exempt and taxable bonds. Talk a little bit about some of our home ownership programs that we currently have available, but this is great timing for a session. We've recently just sent out an announcement effective on June 1st with some significant changes to our down payment assistance program. Well, today we're going to be talking about our new features, our down payment assistance, and our mortgage insurance with MI+. We also wanted to share with you a little bit about what our fiscal year, fiscal 24, looked like as we're coming into a close of fiscal 25. Next slide, please, Jeremy. For fiscal 24, MassHousing was able to help over 1,200 first-time buyers and people who wanted to refinance their properties, and for a total of over $432 million. 54% of our loans were to borrowers of color, 49% were in gateway cities, and 96% were first-time buyers. 54% went to borrowers earning less than 80% of the area median income. MassHousing is a unique entity. We act as an investor or the lender. We offer down payment assistance. We're a mortgage insurance company, and we're also a servicer. In addition, we also administer some state and federal programs, like our Get the Lead Out program and septic repair. Our servicing department services over $4 billion in a servicing portfolio of over 27,000 loans. Today, we're going to be going over our new down payment assistance options, which have expanded statewide coverage. Where else can you get statewide down payment assistance for borrowers earning up to 135% of the area median income? We're really proud to be able to provide this expansion on our down payment assistance and consolidation of some of the products, which will create ease of use for all of our lending partners. At this point, I'd like to turn it over to Jeremy to start going over a little bit on the down payment assistance and provide more detail on the products themselves. And again, we'll take questions at the end of the session. Thank you.
Thanks, Lisa, for the toss. And I will be going over our current DPA offerings and what's changed and what's new. So we'll dive right in. Our WFA 4.0 down payment assistance is the cream of the crop type of down payment assistance. So this is calculated using the household income. So everyone that's living in the household, we need to take that income to account. And it's a $30,000 fixed amount That's 0% deferred. So it's not due until sale or refinance of the property. The biggest change we're doing to this product is we're no longer having acquisition costs, or some of you may reference as purchase price limits. So again, this is a 0% deferred rate, and it's very helpful for those borrowers that can qualify because we don't need to debt them, and it's $30,000 goes a long way in the state of Massachusetts in terms of down payment assistance. So the only change on this product is we are eliminating that purchase price limit. Our two amortizing DPA products, we're keeping the DPA 2% 15-year amortized. This product will be for borrowers that are up to 80% of area median income. We will no longer have any restrictions, and this DPA will be available statewide. And this also will remain at $25,000 fixed amount. Again, qualifying for all first-time homebuyers. Our new DPA, which we're excited to announce, will be available for borrowers above the 80% number, all the way up to 135. And this will be again for first-time homebuyers, also fixed for 25 years at 15% amortization at 3%. But again, this will be kind of covering the area that's arguably most needed, is from 80 to the 135 AMI. And now we'll talk about our first mortgage products in which they will be paired with. So our Workforce Advantage 4.0, again, it's the most beneficial to the borrower, though it is the lower income limits and has household income limits. So with this one, again, you have the 0% DPA. The first mortgage is a subsidized interest rate. And the most important item is MassHousing is covering the MI. So it's a lender paid single MI paid by us. And Lisa will go into the MI benefits with MassHousing as well. Again, a benefit for all MassHousing first mortgage products, we do not charge any loan level price adjustments, no means test or asset tests, and this product is available for all the way up to 4-unit properties, of which you still need 3% real funds. So again, this is statewide, no restrictions on where this is available. And our current product of the up to 80% AMI, again, if this has another benefit for the MI, it's charter level MI. And for up to 80% of AMI, again, no loan level price adjustments, and we are not changing any other items on this product other than it's still qualifying for the DPA 2%. And no statewide restrictions on anything. Our above 80% of AMI all the way to 135, this gets that new DPA attached of 3%. And this, again, no loan level price adjustments, up to 4 units, and it goes with standard level MI, sorry. And with that, we go into our FHA products. We have the Workforce Advantage. We do offer an FHA option. This does not come with MassHousing MI, but does have it is FHA insured. So this, again, no changes except for the elimination of those purchase price limits. And again, also up to 4 units. First-time homebuyer FHA will remain. We're actually going to expand this product to cover up to the 135% of AMI number. Previously, it was roughly around 100%. Now we're going to increase it to a full 135, so a larger swath of this Commonwealth. And again, it is FHA insured, so it does not get MI+. But again, we're eliminating those acquisition cost limits as well on this product. And I will now toss it off to Lisa to discuss our benefits of the MI insurance fund.
Thanks, Jeremy. MassHousing, as I mentioned when I started, is a unique entity because we are a public mortgage insurer. And all of the conventional loans offered by MassHousing come with a benefit called MI+. So whether it's the workforce advantage, where MassHousing is paying for the mortgage insurance on behalf of the borrower, so there's no cost to the borrower, or it's one of our other conventional loans where the borrower is paying MI, whether it's monthly as a single premium, they'll also be getting mortgage insurance payment protection. This benefit is also available for community lenders and lenders who are selling loans to both Fannie, Freddie, or the Federal Home Loan Bank and continue to service those loans. We're recognized as an insurer, as a mortgage insurance company for those entities as well. Mortgage insurance payment protection, what is that? Some of you have heard about this for many years. MassHousing offers a benefit to all borrowers at no cost. Nothing's added on to the loan. If the borrowers should lose their job during the first 10 years of the loan, MassHousing will pay up to 6 months of principal and interest during the period of time that the borrower is receiving unemployment. We realize while someone's receiving unemployment, they're not receiving their full pay. It's very difficult to stay up to date on their mortgage, so we're going to help them out with their payments. It can be used for any 6-month period, and it covers up to $4,000 per month. We've had this benefit since 2004 and have paid over $7 million in benefits to 7,000 claims for borrowers. That's helping people stay in their house when they're not receiving their full pay. This is also recognized by the Massachusetts Division of Banks under the CRA lending test. So this participation, whether it's with MassHousing loans, that all of your borrowers are receiving this for conventional loans, or loans that you're keeping in your portfolio, is really something that can help with loss mitigation for borrowers who are experiencing unemployment. Just to share with you a little bit on our actual claims, our mortgage insurance company has paid over $1,300 in MI claims for $72 million. So we have been there for borrowers. We've been there for lenders during difficult times. We're really proud of MI Plus, which is truly unique to Massachusetts and unique to the Mortgage Insurance Fund. Jeremy, next slide, please. This slide provides to you some of the information on our premiums. We have a mortgage insurance calculator on our website that is available to our lending partners after signing in. Once you sign in, you can use the calculator to obtain what the premium calculation would be. It will give you the factor so that you can figure out whatever the calculated coverage is for you. So if you're doing a portfolio loan, you get to choose that coverage. If it's a MassHousing loan, we're providing to you here some of the coverages for the products and the product codes that are available. Should a lender not want to use the calculator, or maybe you start out with the calculator, the next step would be to obtain a quote. We have the ability for you to obtain a quote and print that out for your file, and that's something that's available. So you have the calculator, you have the quote, and then you would go into a certificate. And the certificate is when you have all of your verified information for you to print that out for your file. So while we know that we may not be embedded into other loan origination systems, and the reason for that is because we are a statewide mortgage insurance program for low to moderate income borrowers, we do have some tools with technology that will allow you to obtain your premiums as you move through your loans through the pipeline. Next slide, please, Jeremy. We have a team of MassHousing production department, relationship managers that manage all of our lending partners, work with our nonprofit agencies across the state, and community-based organizations. They're also very active with all of the realtor associations. I'm sure many of these faces and names look familiar to you because they're your relationship manager. They participate in homebuyer education classes. And just to give you an idea, last year, we were able to participate and had the opportunity through our nonprofit partners to present to over 6,000 potential first-time buyers at online and in-person classes on nights and weekends. The team speaks 7 languages and is also available to assist our lending partners through a dedicated mailbox and phone line as well. Our website is masshousing.com, and our consumers can register from that website for a newsletter and receive updates on MassHousing and our products. Our lending partners, if you're not already signed up to receive all of our announcements, that you can sign up through eMassHousing.com, which is our B2B portal, and sign up for newsletters and announcements through that as a lending partner. So you'll always know right when we're issuing a new product or making any significant changes. Jeremy, next slide, please. We're really at the point right now where we've presented our slide deck to you. Want to open it up for some questions that you may have, and we're glad to jump back to some of the slides as well, if there's some things that you'd like to cover. But hopefully you've heard about our new down payment assistance, heard some of the highlights that we have no loan level price adjustments on our first mortgage products, statewide DPA for borrowers earning up to 135% of the area median income, and some of the features that go along with our products, including the MI+. So Sean, we'll open it up if there are any questions in the chat.
Yeah, nothing yet, but we'll give it a minute or two. If you have any questions, please include it in the chat function here.
Thank you. I know I mentioned our fiscal year 24 and what our numbers were. We know that it's been a challenging year for people in 2024 and moving forward with interest rates. We continue to see, interest rates not in the 2s and 3s or even the 4s where everyone was been waiting for them to go back to. Inventory continues to be a struggle for first-time buyers. But as of right now, our fiscal year closing on June 30th, we're on target to do over $500 million. So the first-time buyers are still out there and looking for opportunities and looking for lending partners to work with that can offer them mass housing, but other first-time buyer and down payment assistance. Keeping in mind down payment assistance for mass housing, you can layer in other DPA programs that are available through cities and towns, and also the Federal Home Loan Bank programs.
Excellent. All right, couple questions coming in. First question, there was, did Jeremy mention some products that are being discontinued?
So the first-time homebuyer Fannie Mae and Freddie Mac products will be discontinued, and they'll be effectively folded into the above and below 80 products. So those borrowers will still qualify for a mass housing mortgage program. We're just streamlining the product offerings to our lenders.
Great. Next question is, what is the monthly payment amount for the $25,000 down payment assistance loan at 3%?
I like the
I guess that would.
off the cuff math, mental math. So I
Yeah.
believe it's roughly 172 and change. So it's only $6 more than the current 2% offering. So we made sure to not make it a detrimental change to our borrower set.
Excellent. Next is why is the renovation feature not available on WFA?
So the renovation features offered on our above and below 80 products, because those are more closely tied to the GSE offerings, whereas our WFA is a strictly subsidized product. So we're kind of limited on what we can offer on those products. And with such a low income threshold, we would find that a lot of borrowers unfortunately just wouldn't qualify. So we just streamline the offering. So the renovation, we do have options on the above and below 80 products.
Couple of requests to see if a copy of the slideshow would be available.
Sorry,
Yes.
I'm sure that the MMBA will send out the slideshow as well as the recording that is available today.
Okay. There's some questions about the gateway cities. Maybe you want to cover that again, but the questions are, the bars buying in a gateway city, will they still qualify at 2%, or will this be changing to the 3% statewide?
So we will no longer delineate gateway city usage DPA usage by gateway city. So you no longer have to memorize those 26 cities and towns, which I'm sure we all do. I still have a cheat sheet next to my monitor, so no matter. So, but we are gonna kind of, if you, with the elimination of first-time homebuyer products, there's gonna be a line of the 80% AMI. So if you're below 80% of AMI, you'll qualify for the 2% DPA. If you're above 80% of AMI to the 135, you will now get 3% no matter where in the Commonwealth you will be buying.
So
Right.
the DPA is open to all cities and towns within the Commonwealth, and our programs are based on income. So depending on whether someone fits into the workforce advantage or the mass housing loan at 80% or below or above 80, DPA would be available statewide at different interest rates.
Excellent. Next question has to do with allowing, I guess, banks or credit unions that are not approved with mass housing or currently suspended to get signed up again.
Sure, I'd be glad to take that. So we do currently have a wait list of lenders that would like to come on board with mass housing. If there is a lender who's interested in that, they can contact our lender approval mailbox or HO home ownership operations or home ownership lending email that we have posted, and we can add them to the wait list. We did issue an email or an announcement in November of 2024 regarding minimum loan production and length of time lenders would need to wait to reapply with mass housing. So I would just ask lenders to take a look at that announcement, which is posted on the homepage of our website under the announcements as well.
Excellent. The WFA program, I believe that is the only program where the income limit is based on the household size, or is it 60% AMI cap?
So that calculation will be 60 should say it's household income size, and we actually provide a chart on emasshousing.com with a reference of it does escalate based on household size.
And that is the only product that's based on household income.
Yes, that will be the only product with household income. All others are based on borrower income.
Excellent. I'm just going to throw a question in there because I've run into this personally, is on borrower. I usually differentiate qualified income versus compliance income, right? Because sometimes those two numbers can be very different. How is something, like earlier in the year, we're only a third of the way through the year, somebody that may have received a bonus that is abnormal, is that count? Like, how are those incomes, those additional income looked at?
So all of our compliance income is with a company with a broad brush. If there are scenarios that you want us to look at, we do have an HO loan review box that we can look at your specific scenarios. Typically, what we would say is year to date going forward. So if it's been collected year to date, we would have to count it in our compliance income, and then we would annualize it. But again, if I don't want to paint with a very broad brush either, so we do
Yep.
have a very good loan review email box that lenders may use if you have any specific questions.
Great.
So we have two risk analysts at Mass Housing that work directly with Jeremy, that work with our lending partner underwriters. So when they're taking a look at income, maybe they're getting a little tangled up in it, or they just want another set of eyes. As you mentioned, Sean, for that compliance income that might be bumping up against the maximum compliance income, and our risk analyst can take a look at that with them and walk through that calculation.
Great. Next question is, does the DPA run out? And the next one is, when will the new DPA take effect?
So fortunately, there is no like blue light run to the finish line before the money's out type of scenario here. Currently there is no sunset for the DPA availability. So you don't need to wait for that. We've run out of money email. And in terms of taking into effect, the new product sets will take effect across the board for all locks effective June 2nd.
Great. Just making sure I didn't miss any questions here.
Also, at emasshousing.com, on our homepage of our website, we do have a training section where our lending partners can take a look at our trainings, sign up for live trainings that we do frequently, look at our video recorded trainings that are there as well. So we do have on demand as well as live trainings to sign up on. So I would just encourage anyone who is a partner, if they're doing business with us, have new employees starting, someone needs a refresher. We have trainings from managing loans through your lock desk to closing, to delivery, to what are some of the underwriting nuances are with MassHousing, to the actual just product overviews as well. Lots of resources available in addition to marketing materials and co-branded materials on our website.
Great. I'll just throw a couple more out there while we wait for any additional questions. But 2 to 4 units, that's certainly been fairly popular product. Minimum borrower contribution being 3% of their own funds. Is that correct?
Yes.
Okay.
3% of their own funds into the transaction.
And 75% of rental income being accounted for towards the income threshold.
Yes.
And also on as someone who's purchasing a multifamily, landlord education is required in addition to the first-time buyer education class as well.
Great. And 45% max DTI is across the board on all products, correct?
It is. We feel pretty confident that at that point, that's where the affordability, we certainly understand that there are products that and investors that will go higher than that, but we are capping it at the 45 DTI.
And I know we've run into several 2 to 4 unit scenarios that may not fit the FHA self-sufficiency test, which is not a requirement, if I'm not mistaken, on the MassHousing products.
Correct.
On our conventional, that's correct.
Yeah.
Yep, on the conventional product. Yep, you're right. Non-FHA product.
So, lots of options with MassHousing, from our conventional to FHA to insuring loans with us for portfolio. So working with MassHousing, lenders can work with us in many different ways to be able to deliver loans to MassHousing and to offer affordable loan programs and statewide DPA to, if you're a bank, to your depositors and your customers, and also just out in the marketplace as well.
Great. Any recommendations on best practices? If I'm not mistaken, I mean, obviously there's credit score requirements, but is income usually the way you start? Meaning that if the borrower's well over 135, okay, we can't look in MassHousing, or there are other kind of recommendations that you may make for the ideal client that could be a good fit for the products?
Great question, Sean. And I think, starting with MassHousing or affordable programs first for first-time home buyers, and then going out to what other offerings that you have. So first seeing whether they fit with MassHousing's income. Are they a first-time home buyer? Have you been able to run your automation and receive acceptable findings? But starting with MassHousing and then moving out to other products that might be available is a great way for lenders to look at MassHousing. I would encourage anyone also in sort of that best practice is, before a loan officer or anyone is offering MassHousing, whether your company is signed up with us and has been for a long time, is to make sure that they have taken a recent training. Things have changed and you want them to be as well informed so that they can then show that confidence to that first-time home buyer about what's available to them. So ensuring that everyone is trained and that they have the resources, they know how to use our website, use the income tables, as well as the mortgage insurance calculators, is extremely important to the success for that first-time buyer, but also for the success of the relationship with the lending partner.
Great. And I would just reiterate that we often forget about a rate and term refinance, which, if I'm not mistaken, also is possible without any LLPAs, because we often write first-time home buyer products where on the purchase where all of the LLPAs are waived, but when that client goes to refinance, they're now hit with those LLPAs, so the pricing just doesn't make sense. So looking to a mass housing product with no LLPAs on a refinance, a rate and term refinance, often is a good solution.
It certainly is, and thank you for bringing that up. Because oftentimes, I think everyone will think of us as, you know, a purchase transaction with mass housing, but that limited cash out rate term refi for income eligible borrowers can also work very, very well and be less expensive for many borrowers. And they don't have to have their first mortgage with mass housing to be able to refinance in with us. They do need to be income eligible.
Yeah, up to the 135. And
right. And that's
great.
a pretty high number in many parts of the state. It's over $191,000 in many communities in the Commonwealth. So someone still being able to take advantage of down payment assistance as a first-time buyer, or someone being able to refi with the state's affordable housing agency at those income levels. We're really proud of that.
And do you still have the closing cost credit eligibility for service members?
We do. A $2,500 closing cost credit is available for current service members, veterans, and Gold Star families. And that's something that the lender would note, and we would reimburse them at the closing. Glad to be able to still offer that to our service members.
Excellent. And no subordination of the DPAs, correct?
Correct. Said that in unison. Yes, the DPAs are being offered, and when someone is paying off their first mortgage, whether it's through a refinance, we want that money back to be able to help out another first-time home buyer. So there are no subordinations on the down payment assistance loans from Mass Housing.
And can they own any other real estate at the time of closing?
They cannot own any other primary residence or any other residential property. It's very unusual that we would see someone with a commercial property. So more than likely, it's easier to say that no, they cannot own any other property.
Okay. If it's a same day sale and purchase, that would work.
Correct.
Right. Sarah, do you have anything else? I think we've covered all of the questions. If anyone else has anything else that's come up, please feel free to include in the chat box.
I don't have anything, Sean. I think that you asked a lot of great questions, and I forgot about the closing cost credit for service members. So that was a great point to bring up today as well. And you allowed that plus the DPA.
Correct. And many of our loans also have layering of other down payment assistance, and those are pretty amazing loans to be able to help a first-time buyer locate other down payment programs, layer those in, and get them into a property at the lowest payment possible, and take advantage of all the assistance that's available out there.
Yeah, I know we had a loan officer that was able to get up to 50K in total, and I heard that was about half of the record, which I hear is close to 100K in layering. But it's incredible.
Amazing. It certainly is. Thank you.
And I'll just plug for Thursday's Affordable Lending Series. If you want to talk about layering, we're going to talk about down payment assistance, and also have a couple of CDCs on the call about their programs available.
Yes, absolutely.
Well, I hope this session was helpful. I hope some of it was just a refresher for some of our lending partners. Also just re-engaging others. Our consumer website is masshousing.com. Lots of information about our products. We also list our lending partners there, and we list our top lenders and top loan officers. So they also have the ability to receive referrals from MassHousing when a borrower goes to that website. Our B2B site again is emasshousing.com. And from there, you can sign up for our announcements as well to stay current with anything that's happening at MassHousing. But thank you so much, Sean, Sarah, and the MMBA for inviting us to this presentation today and giving MassHousing this opportunity. We really appreciate the partnership.
Well,
We
you're welcome.
appreciate the partnership as well. Thank you so much for
Yeah.
joining us today and sharing with us today. I think those are great new changes coming out for the DPA for everybody.
Thank you both very much. Appreciate it. Thanks for being a great partner.
Thank you all.
And thank you, everybody, for joining
All
the call
right.
today.
Have a good
Have a
afternoon.
good day, everyone. Thank you.